Hey everyone, it's Graham here and welcome back to the channel. Can artificial intelligence actually help you beat the stock market? Can AI give you an edge, find hidden gems, and maybe help you build wealth faster than ever before? We see headlines everywhere about AI changing the world, but what does that mean for your personal investment portfolio? The rise of powerful AI tools is starting to level the playing field in a way we've never seen before. We'll separate the hype from the reality and give you a clear, honest look at what these tools can and cannot do. By the end of this video, you'll have a much clearer picture of whether integrating AI into your strategy is the right move for you. This is the power that AI brings to the table. How do you use it? Which tools are legitimate? And what are the risks involved? So, why are we talking about this now, in 2024? The answer is simple. Accessibility. For a long time, the most powerful financial AI was locked away. But over the last couple of years, the AI revolution has gone mainstream. These once exclusive technologies are now available to almost anyone with an internet connection. You've seen it with tools like ChatGPT. That same underlying technology is now being applied to finance. Now an AI tool can do a huge chunk of that heavy lifting for you in a matter of seconds. It can even analyze market sentiment based on thousands of online conversations. What this means is that the information advantage that big institutions used to have is shrinking. This is why it's so important to understand this topic right now. Understanding how to leverage these AI tools is quickly becoming a crucial skill for any serious investor. Now you might be thinking, does this apply to me? The answer is yes, no matter where you are. We'll focus on how AI impacts everyday investors in major markets like the United States, the United Kingdom, and Germany. For investors in the US, you have access to innovative AI platforms. In the United Kingdom, London remains a global financial hub. And for our viewers in Germany, the powerhouse of the European economy, the situation is different again. No matter your home market, AI has practical applications that can make you a more informed and capable investor. We've been talking about AI, but what does it mean for money and markets? Artificial intelligence creates computer systems that perform tasks requiring human intelligence. Think of it as a super-powered assistant that's incredibly good at processing information. When applied to finance, it's like teaching a computer to think like a very fast financial analyst. An AI can read every annual report from every public company in the world, all at once. The magic behind financial AI is machine learning, where systems improve from data automatically. Think of it as a powerful probability engine, shifting the odds in your favor. It's about making smarter, more informed bets based on vast amounts of data. So how does an AI actually think about the stock market? It generally uses three main approaches to analyze information. The first is quantitative analysis, or quant. This is all about the numbers, sifting through massive data sets of historical market data. The second pillar is natural language processing, or NLP. This is where AI starts to understand human language, interpreting text-based information like news articles and social media feeds. The third pillar is the analysis of alternative data. Alternative data is any information that isn't from a traditional financial source, like satellite imagery or credit card transaction data. The most powerful AI financial tools combine all three to create a comprehensive view of a stock or a market. How is AI being used today to make investment decisions? Hedge funds and investment banks have been using AI for algorithmic trading for years. They also use AI for portfolio optimization to maximize returns while minimizing risk. Now this same power is trickling down to the retail investor. You can use AI-powered platforms for stock screening and discovery. Another use case is in risk management. AI can monitor your investments and alert you to potential risks. Finally, AI is revolutionizing how we understand financial information. You can ask an AI tool to summarize a 50-page earnings report for you. This makes sophisticated financial analysis accessible to everyone. With all this talk of powerful AI, it's easy to wonder if the human investor is becoming obsolete. The best approach is not AI versus human, but AI plus human. The AI is your co-pilot, your analyst, your data cruncher. But you are still the pilot who makes the final call. AI is excellent at finding patterns, but struggles with what it has never seen before. Your personal financial situation is unique. Your long-term goals, your ethical considerations, these are deeply human factors that an AI cannot fully grasp. Therefore, your role as an investor shifts. Your job is to ask the right questions of the AI. Ultimately, success will come from learning how to effectively collaborate with these intelligent systems. You free up your own mental bandwidth to focus on what humans do best: strategy, critical thinking, and long-term planning. It's to use AI to help you become a smarter, more effective, and more confident investor. Let's explore ChatGPT as a financial tool. It can be a powerful starting point for beginner investors. Think of it as a personal financial tutor, available 24/7. You can ask it questions like, explain what a PE ratio is, or what are the differences between a stock and a bond? It can also summarize earnings reports quickly. For example, ask it to create a table comparing Ford and GM. This allows for quick investment screening. Remember, it's a generalist AI, so always cross-reference its information. Use it as a starting point and verify data with reliable sources. It's a powerful assistant, but you are the boss. If ChatGPT is your versatile pocket knife, AlphaSense is a specialized power tool for serious research. It's an AI-powered market intelligence search engine used by analysts and corporate strategists. AlphaSense helps you find critical information within millions of documents like company filings and expert research. Its AI understands the concept behind your search, helping you find insights you might miss. The real power lies in going beyond keyword searches. Smart synonyms automatically include related terms in your search. With AlphaSense, you can scan thousands of documents, including transcripts and patent filings. This gives you a 360-degree view, including potential risks and opportunities. It represents the next level of AI-powered research, helping you uncover unique insights. When we talk about financial data, one name stands above almost all others: Bloomberg. For decades, the Bloomberg Terminal has been the gold standard for financial professionals, a legendary piece of equipment found on every serious trading floor. So, it should come as no surprise that they are at the forefront of AI with their own specialized model, known as Bloomberg GPT. This isn't a tool you can just download from an app store. It's a massive, large-scale language model that was built from the ground up specifically for the world of finance. It represents the pinnacle of what's possible when you combine cutting-edge AI with an unparalleled dataset. What makes Bloomberg GPT so special? It's all about the training data. While a general model like ChatGPT is trained on a vast and varied diet of information from across the internet, Bloomberg GPT was fed a carefully curated 40-year archive of financial information. This includes decades of news articles, financial statements, company filings, earnings call transcripts, and proprietary Bloomberg data that no one else has access to. By training exclusively on this high-quality finance-specific data, the model develops a much deeper and more nuanced understanding of financial language, concepts, and the intricate relationships within the global economy. So, what can it do? The applications are vast and are primarily integrated into the existing Bloomberg terminal to supercharge its capabilities. For example, an analyst can ask Bloomberg GPT to perform complex tasks like analyze the sentiment of all news articles related to the Federal Reserve's interest rate decisions over the past year and summarize the key themes. The AI can instantly scan and interpret thousands of articles to provide a concise, accurate summary. It can also help generate code for quantitative models, classify news for relevance, and even answer complex financial questions with a much higher degree of accuracy than a general-purpose AI could ever hope to achieve. While you and I might not have direct access to Bloomberg GPT today, its existence is incredibly important for all investors. It signals the direction the entire industry is heading. The technology and techniques developed for these massive institutional models will eventually trickle down and be incorporated into more accessible retail platforms. The advanced sentiment analysis, the deep understanding of financial nuance, and the ability to process proprietary data are features that will likely become standard in the investor toolkits of the future. It's a preview of the next generation of AI-powered finance where a deep, domain-specific understanding will be key. While tools like AlphaSense focus on deep research and Bloomberg GPT serves the institutional world, there's another category of AI tools aimed squarely at the active trader. One such platform that has gained attention is TradeAlgo. This type of tool shifts the focus from long-term fundamental analysis to short-term market movements and technical patterns. TradeAlgo and similar platforms use AI and algorithms to analyze real-time market data, looking for trading signals and opportunities. They're really designed for investors who are more active, making trades on a daily or weekly basis rather than holding for years. The core function of a platform like TradeAlgo is to provide AI-generated trading signals. The system's algorithms constantly scan the market for specific conditions, things like unusual trading volume, price breakouts, or specific chart patterns that have historically preceded a significant price move. When the AI identifies one of these potential opportunities, it sends an alert to the user. For example, it might send a notification saying, AI signal Apple is showing strong bullish momentum and has just broken above its 50-day moving average. Potential entry point detected. This gives traders a real-time heads-up on stocks that are in play. Beyond simple signals, these platforms often provide more advanced tools. This can include AI-powered scanners that you can customize to find stocks matching your specific trading style. You might set it to find low-price stocks with high relative volume and positive news sentiment, for example. Many also incorporate what's known as options order flow analysis. The AI analyzes large institutional options trades to get a sense of where the smart money is placing its bets. If the AI detects an unusually large number of call options being bought on a particular stock, it might signal that big players are expecting the price to go up soon. It's absolutely essential to understand that these tools are built for a specific, high-risk style of trading. They're not for the faint of heart or for someone investing for their retirement in 30 years. Algorithmic trading is fast-paced and requires discipline and a solid risk management strategy. The AI signals are not a guarantee of success. They're probabilistic suggestions based on historical patterns. Many signals will not work out. Success with these tools depends on using them as one input in a broader trading strategy, not as a magic crystal ball that you follow blindly. They offer a potential edge, but that edge comes with significant risk. So, we've looked at 4 very different types of AI tools: the generalist researcher ChatGPT, the deep dive intelligence engine AlphaSense, the institutional powerhouse Bloomberg GPT, and the active trader's assistant TradeAlgo. With all these options, it can be overwhelming to figure out where to even start. The most important thing to remember is that the best tool for you depends entirely on your personal investment style, your goals, your budget, and how much time you're willing to commit. There is no single best AI tool, only the tool that is best suited for the job you need it to do. If you're a beginner or a long-term passive investor, something like ChatGPT is an excellent and free starting point. Your main goal is to build knowledge and conduct occasional, high-level research on companies you plan to hold for years. You can use it to understand concepts, summarize annual reports, and compare a few stocks you're interested in. You don't need real-time signals or deep institutional data. Your focus is on the big picture and the long-term fundamentals, and a general AI assistant can help you with that research process without complicating things or costing you any money. If you're a more serious, hands-on investor who enjoys digging into the details and wants to find an informational edge, then a more specialized platform like AlphaSense might be worth exploring. This is for the person who wants to go beyond the headlines and understand the why behind a company's performance. You're willing to invest both time and potentially a subscription fee to get access to better data and more powerful search capabilities. Your strategy relies on forming a deep understanding of a few select companies, and this type of tool can act as a massive lever for your research efforts. Finally, if you're an active trader who thrives on market volatility and short-term price action, then platforms like TradeAlgo are built for you. Your focus is on technical analysis, momentum, and real-time market dynamics. You need fast, actionable signals to inform your daily trading decisions. You understand and are comfortable with the higher risks involved in this style of trading. For you, the value isn't in a 50-page research report. It's in a timely alert about unusual options activity or a potential price breakout. The key is to be honest with yourself about your profile as an investor, and then choose the co-pilot that best matches your flight plan. For generations, the most respected and time-tested method of investing has been fundamental analysis. This is the classic approach championed by legendary investors like Benjamin Graham and his most famous student, Warren Buffett. At its heart, fundamental analysis is all about determining a company's true intrinsic value. The idea is simple. If you can figure out what a company is really worth, you can then compare that to its current stock price. If the stock is trading for less than its intrinsic value, it's a potential bargain. If it's trading for more, it might be overvalued and risky. It's the investing equivalent of being a detective, looking for clues to a company's real worth. To find this intrinsic value, a fundamental analyst acts like a business owner. They don't just look at the stock ticker, they dive deep into the business itself. This involves meticulously studying a company's financial health by poring over its official reports, the balance sheet, the income statement, and the cash flow statement. They analyze key metrics like earnings per share, the price-to-earnings ratio, return on equity, and debt levels. The goal is to answer critical questions. Is this company profitable? Is it growing? Can it pay its bills? Is management competent and trustworthy? It's a bottom-up approach focused on the quality of the individual business. Beyond the numbers, fundamental analysis also involves a qualitative assessment of the company. This is where the art part comes in. An analyst will evaluate the strength of the company's brand, its competitive advantages, often called its economic moat, and the quality of its management team. They consider the overall industry the company operates in and its long-term prospects. For example, a company might have fantastic numbers today, but if it's in a dying industry with no plan to adapt, a fundamental analyst would see that as a major red flag. This approach requires patience, foresight, and a deep understanding of business principles. The entire philosophy of fundamental analysis is built on a long-term perspective. It's not about trying to predict short-term market fluctuations or what the stock price will do next week. It's about buying a piece of a great business at a fair price and holding it for years, allowing its value to grow over time. It's a disciplined, methodical process that requires significant time and effort. For decades, this has been the gold standard for prudent investing, a reliable way to build wealth slowly and steadily by focusing on tangible business value rather than market hype or fleeting trends. Technical analysis is the opposite of fundamental analysis. Technical analysts believe everything is reflected in price charts. They study historical price movements and trading volumes to forecast price direction. It's about the what and when, using indicators and patterns on stock charts. These include moving averages, the Relative Strength Index, RSI, and chart patterns like head and shoulders. Human psychology drives the market in predictable ways. Time frames vary, unlike the long-term view of fundamental analysis. Day traders use one-minute charts while swing traders use daily or weekly charts. Decisions are based on price action, not company financials. Fundamental and technical analysis have long been at odds. Both require skill and have been used by successful investors. Let's explore AI's role in trading. How does AI compare to traditional methods? AI's key advantages are speed and scale. It can analyze vast datasets in seconds, far surpassing human capabilities. AI monitors thousands of stocks in real time, identifying complex patterns invisible to humans. AI excels in analyzing unstructured data and sentiment through natural language processing. It understands the emotion behind news and social media, predicting market sentiment before price changes. This combination bridges fundamental and technical analysis, offering a comprehensive investment view. Let's imagine Shopmart, a retail company. Susan, a fundamental investor, spends hours analyzing Shopmart's reports. David, a technical analyst, examines its stock chart, noting resistance levels. Alex uses an AI platform. Instantly, the AI generates a dashboard showing key ratios and technical charts. It also reveals increased foot traffic via satellite imagery, data not yet public. The AI forecasts a positive earnings surprise, giving a cautiously optimistic rating. Alex gains a more complete data-driven view, combining fundamental, technical, and alternative data for informed decisions. The future of smart investing isn't about choosing old versus new. It's about creating a hybrid approach that combines traditional analysis with the power of artificial intelligence. The most successful investors will blend human judgment with machine intelligence. Think of it this way. Fundamental analysis gives you the what. Technical analysis can help with the when. And AI acts as a supercharger for both. A practical hybrid approach involves using your judgment to form an investment thesis. Then use an AI tool to screen for companies. The AI is a co-pilot, not the pilot. This synergy, combining human intuition with machine learning, is where the real magic happens. Let's cut to the chase. Does AI actually deliver better returns in finance? The best place to look is hedge funds, where billions ride on advanced algorithms. Top funds like Renaissance Technologies and Two Sigma have outperformed the industry for years thanks to AI and quant strategies. Reports show AI-driven funds have beaten traditional ones by 3–5% annually, a huge edge at scale. These firms invest heavily in tech and talent, constantly racing to stay ahead. Their success proves AI can work, but only with massive resources and relentless innovation. For everyday investors, it's proof of concept, not a promise. The takeaway? AI can beat the market, but it's not easy or cheap. Retail investors should be inspired, but realistic about what's possible with off-the-shelf tools. The real edge comes from combining smart models, great data, and constant adaptation. In short, AI works at the top, but it's no silver bullet for everyone. So, what does academic research say about AI in finance? University studies confirm AI models can outperform simple strategies, especially in risk management. Deep learning models have beaten buy and hold in backtests, mainly by avoiding losers. AI can even spot red flags in CEO language, predicting underperformance from subtle cues. But there's a catch: real-world results often lag backtests due to changing markets and costs. Academics agree. AI offers a statistical edge, not a guarantee. Models need robust data and constant updating to stay relevant. The bottom line: AI is powerful, but not infallible. Use it as a tool, not a crystal ball. Stay skeptical, and always understand the limits. What about AI-powered ETFs for regular investors? These funds use AI to pick stocks, but results are mixed. Some AI ETFs have outperformed in certain years, but many lag when market conditions shift. Consistent outperformance is rare. Most struggle to beat simple index funds over time. The lesson? An AI label doesn't guarantee success. Performance depends on the quality of the model and its adaptability. Even sophisticated AI can be caught off guard by market changes. For retail investors, due diligence is still essential. Don't expect miracles, understand the fund's strategy and risks. AI can help, but it's not a shortcut to easy riches. Smart investing still requires homework. Use AI as a tool, not a ticket to instant wealth. Let's get real. AI isn't a magic bullet for investing. Even top models are only right a bit more than half the time. Markets are chaotic, driven by unpredictable events and human emotion. AI can be blindsided by black swans and regime shifts. Overfitting is a real risk. Models that ace backtests often flop in live trading. AI gives you a probabilistic edge, not certainty. Success comes from using that edge consistently, with discipline and risk management. Beware of anyone promising guaranteed profits or sky-high accuracy. AI is a powerful ally, but it needs a smart, skeptical human at the controls. The real secret? Combine AI's speed with your own judgment. That's how you survive and thrive in unpredictable markets. Here's what matters most. AI is your research assistant, not your autopilot. Its strength is processing vast data, not making perfect predictions. Today, anyone can access powerful AI tools. What was once exclusive to hedge funds is now on your laptop. The best investors blend human insight with AI's analytical power. You set the goals and strategy. AI helps you test ideas and spot opportunities. This hybrid approach is the future: human intuition plus machine intelligence. Remember, AI offers a statistical edge, not a guarantee. Hedge funds and studies show it works, but retail results vary. Implementation and understanding matter most. Use AI to shift the odds in your favor, but expect ups and downs. Manage your expectations and use these tools wisely. You're the pilot. AI is your co-pilot. That's the real path to smarter investing. Ready to start? Begin small. Use free AI tools to learn and research. Don't risk big money on untested signals. Use AI to screen stocks, summarize reports, and speed up your research. Let AI handle the grunt work, so you can focus on big decisions. Stay updated. AI in finance is evolving fast. Keep learning and adapting as new tools emerge. Subscribe to the channel for weekly updates and practical guides. We'll help you master the latest trends and tools. Thanks for watching. Hit subscribe and see you in the next video. The future of finance is here. Make it work for you.